Behind the grandeur of buildings that dot Singapore's skyline, the engine of facilities management is always in full gear. For over 30 years, family firm Kim Yu Integrated has been among those making sure government offices and landmarks are not only safe, but a sight to behold.
My father, Jim Tan, started his career in the 70s as a migrant worker, actually coming all the way from Malacca. So he started off as an electrician, working for other people, all the way until 1985, so 30 years ago. And he founded the company Kim Yu Electrical and Sanitary.
The elder Tan ran the business with his wife before passing on the baton to their eldest son. Kim Yu has since grown from 10 employees to 500 staff, and 2 of the Tan's 4 children are now driving the firm to the next level of digital building maintenance.
We were quite impacted with the dormitory lockdown of the workers. We were already engaging with software provider to use digital tablets, smartphones. We also have been working with vendors to do smart vehicle tracking, telematics. But the pandemic actually pushed us to further look into all this, how to use technology to cut down reliance on manpower.
Kim Yu is going big on predictive maintenance, a necessary transformation that opens up growth opportunities and also secures its family legacy.
This is a critical period because the new norm is different from before. The older generation will feel that if it's not broken, don't touch it, don't change it. We have a lot of case study like Kodak, for example. So they are resistant to change and eventually they are replaced.
Family businesses are generally resilient, surviving financial crises, disasters, and epidemics. But amid business uncertainties, many are now faced with questions about longevity and succession planning.
Family businesses actually need to proactively drive business transformation, whether it's through digitalization or innovation, or finding new business partners and markets, customers and revenue streams, scaling up for growth, or shutting down unprofitable business lines.
HSBC says much of the wealth in Asia has been created in the last 20 to 30 years, and family offices are thriving as they help set up structures for wealth preservation and transfer. There were about 400 single family offices in Singapore as at end 2020.
Business families are generally in the earlier stages of the succession cycle, but we're still looking at the wealth transfer estimates in the ballpark of $1.9 trillion in this region over the next decade. 85% of Asia's billionaires are first-generation owners, and we are also looking at many of these successful CEOs hitting retirement age during the same time period.
In Singapore, 1/3 of the constituent stocks on the exchange are tied to some of the region's wealthiest families.
The Wee family's UOB and UOL group, as well as the Keswick family's 4 Jardine companies. Those 4 Jardine companies, Jardine Matheson, Dairy Farm International, Hong Kong Land, as well as Jardine Cycle and Carriage, they now make up 10% of the STI.
In recent years, these family-tied firms have also restructured to maximize shareholder value and efficiency.
We saw Jardine Matheson acquire Jardine Strategic this year. We saw Wilmar International list its YKA business in China last year. And we also saw, back in 2019, OUE Commercial REIT basically acquire OUE Hospitality Trust.
Experts say constant evolution rooted on entrepreneurship is the reason why family businesses survive.
You are actually transforming the business as you transit from one generation to another. And I think that's where the magic happens, because that's when the life cycle of the business and the life cycle of the family are aligned.
An SMU study found that potential leaders need to be exposed to the business 10 to 15 years before transition happens.
you got to get them initiated into what the business is about, what are the values and culture of the family-owned business, and then of course start asking where do you align your own passion and interest to the next leg of the business.
As the pandemic rages on, family businesses will likely focus more on building resilience.
Contingency planning, emergency planning, formalizing their policies and processes with regards to investment decision making, making more strategic diversification of jurisdictions, assets, holding vehicles, as well as human capital.
For Kim Yu, the family's third generation will have the freedom to pursue their own interests.
When you explore and work for other people, you get exposed to different management styles, different departments, and you gather this wealth of knowledge that you can contribute back into your family business.
For now, Kim Yu's future hinges on the strength of its people, be they family members or otherwise.
The pandemic is ever changing, but you need to be able to adapt and to make sure that the business can continue to grow and run and appoint the right people to manage the organization and continue to pass from generation to generation.